Hey everyone, it is Evan here from the Trade Risk on Friday, October 19th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So I'm going to keep this a little bit short this week. I'm traveling, I'm on the road right now, so we're going to run through these things a little bit quicker than usual, but really not a whole lot changed this week. If we look here at the S&P 500, this is the weekly chart right now, and the weekly performance was just dead flat, and we were up 0.02% in the S&P 500. So we virtually traded this entire week with volatility, but after everything was said and done, we ended flat on the week. So when we kind of zoom in here and we look at the action in this candlestick, we do have very much an inside week. That means we traded entirely within last week's range, but structurally here, nothing really has changed. We didn't see some very sharp recovery to the upside. We didn't see more follow through. It's really sort of a wait and see type of candle, type of market right now. And as I mentioned, the volatility still remains elevated. VIX closed slightly lower here on this week, and it's trading just under 20, but still elevated from, July, August, and early September levels. So when we look here at the weekly chart of the S&P 500, we are still holding right at more or less this long-term trend line here, and we are still holding above last week's lows. Those are going to be critical levels to pay attention to heading into next week's trading. So if we go down to a daily chart now and we look at the action here, the one kind of key important thing, and we talked about this in our midweek video, but we did get this big rally going on Tuesday. We saw a over 2% rally in the S&P 500, so some early gains this week, and we tried to sort of taper the excitement and expectations perhaps a bit in our midweek video, saying, look, this rally is very nice. Wouldn't be surprised to see it continue a little bit more. It didn't do that. It kind of stalled out the very next day. But really, we talked about the fact that even a 2% rally here on Tuesday didn't change the structure at all. We were still in kind of a broken short-term market, and we really needed to see more digestion through time or just a significant V-shaped rally back up above, say, 2870 or so to really recover and wash and prove that we washed out some of the weaker hands here in the major markets. So as it stands, again, that rally really didn't get anything beyond this one-day ripper here on Tuesday. We rolled back down and we closed essentially flat. So when we look here, we'll go to the S&P or the SPY ETF now. When we look here at these nearby levels, really we're just kind of sandwiched now in between, call it 270.70 or just under 271, which was last week's lows. And on the upside now, really we'd be paying attention to this 280 to really 281. Right in this general area, we kind of have a pivot swing low down here, and we have this new high up here that we just made on Tuesday, and that's where we want to pay attention to. Everything in here in this 10-point range is really just noise. And we know that the VIX is elevated right now, so we should expect that there is going to be some whipsaw in both directions. So you should plan for that if you're trading this type of volatility, this environment. Maybe you're cutting your position size in half, increasing the distance in your stop losses just not to get whipsawed, or maybe you're just kind of taking the rest of the week or month off and waiting for some of this dust to settle. But sort of as we look at the near-term levels, 280.70, that's last week's lows, and then the highs here from Tuesday. Those are the reference points, and this is sort of the playground that we are currently in. If we go to the Russell 2000 here, you can see this closed much closer to last week's lows. So again, we had this nice almost 3% move on Tuesday. We gave all of that back Wednesday, Thursday, and Friday. We're kind of contained in here. Again, for the short term, I'd still be paying attention to last week's lows and then Tuesday's highs. I think that's essentially the nearby range that we're looking at. We talked about in our midweek video that we did break below this longer term trend line, and the longer we stay below 160, kind of it's more of a risk off in the short term anyway, so long as we are trading under that 160 or so for the Russell 2000. Finally, the NASDAQ 100 here, you can see did give back that Tuesday rally as well. We are still up, above kind of in the top half of this range. If we were to look at last Thursday's lows as the 167 as a support area, or as where buyers stepped in and the sell-off stalled out, and then the highs here of around 178 on Tuesday. You can see we're still in the kind of top half of that, but still it's kind of a wait and see type of market here with respect to all of the major indices. Risks do remain elevated there in the short term, and we should plan accordingly. One last comment on the major markets. We are in earnings season now, and that's going to be interesting to see if company reports guidance looking forward. Can they, are they good enough to see buyers return to this market? We saw Netflix seemingly report some good numbers this week. I didn't look too closely personally at this report, but I think on the surface, everything looked pretty strong, and we can see the market reaction here. It just completely sold it off, filled the gap, and then proceeded to even sell off into the close here on Friday. So if this is the type of reaction we can expect from good numbers, then, we may have some more uncertainty and volatility ahead of us. Again, don't quote me on the Netflix numbers specifically, just because I didn't look too closely at this report. So that is the major markets. Let's get into some others here. TLT it ended up closing down 66 basis points inside week. We're still above the lows from just last week. We are below these highs here. So again, near-term levels to pay attention to, 115 and change. And then last week's lows down here around 112.50. Trend is lower. Sellers still in control. USO did end up finishing down on the week here. Tried to get going early. That failed, rolled over, and it is still trading down here below the 1525 resistance, now trying to break below 1470. So short-term downtrend is intact there. We are looking to see if buyers can step in and put in some type of higher low. Natural gas still chugging along up here. We did break this accelerated trend line. Now it looks like we're just kind of moving sideways here in this consolidation. It had a beautiful move throughout September, early October. Now it's consolidating here. Nothing wrong with that whatsoever. Let's see if we can get a little more sideways and then maybe turn this into a continuation pattern if it can start to clear over 2760. If we go to metals next, gold very, very flat this week, just totally stagnant market here. It is holding above this 115 breakout. This was the big expansion bar we saw last, the Thursday on the 11th of October, and which was, last Thursday's session. Still holding above here. That is constructive. Good to see MACD holding in positive territory. I think if we can, really get going here above this tight consolidation, 116.50, you might get this nice continuation pattern here. Low risk entry point. Be looking at that next week for GLD. Otherwise, if we roll over here, fall back into this old range, then it's kind of the same song and dance, and we want to be a little more defensive. Silver also very tight this week. Looking at this 1390, just under $14. Call it $14. For a breakout level for momentum to kind of continue there and perhaps get those trends going to the upside. So those are the major markets. Let's look quickly here at some sectors. If we look at the top performing sectors this week, it's defensive tone to it. Staples, number one here, 4.4% to the upside, which was a nice move here, and a lot of those gains coming on Friday's session. I know Procter & Gamble had a very nice session here, 8.8% on Friday's trading, but good volume coming in, trying to get back up above some of these near-term levels, 54.50 or so. That was a longer-term inflection point for XLP. You can see we closed above the last 2 weeks highs, so kind of a nice ripper here to the upside, taking out the prior 2 weeks highs. Staples looks like could see some continued rotation from here. Utilities, XLU, second top performing sector. Again, nice weekly bar here, relative strength, 3% to the upside. Didn't quite take out the prior week's highs, but it is flirting back up with this $55 resistance there. So as we could see, as there's uncertainty in the market, Staples, utilities, that makes sense. And financials actually, which is a little more interesting here, not always considered a safe haven by any stretch, but XLF is clinging on, it's holding on to this band of support in here. So we have the July lows that come in right around this 2630 area. We are holding above it. We closed positive on the week, and it's going to be important for the market to hold on here, because if the financials really start to lose this structure here, these lows from July, and all of this supply in here, then that really is going to put some pressure on the broad indices. So financial is going to be an important level to hold in here around or above $26. On the downside, we saw energy take a hit this week or continue its slide lower. It did take out last week's lows, so we can see here in XLE that the lows on XLE was 71.89 last week. We closed below that. This is a pretty important area of structure. This is where the market has held above for the past 5 or 6 months. If we continue lower from here, not a good sign there for the energy space. Consumer discretionary, also second worst performer. It was an inside week. We did hold above last week's lows, but still seeing some pretty nasty candles here the last 3 weeks of selling. So it does not look good here for discretionary. It is still in kind of a seller's bear trend there in the short and intermediate term. And then finally, materials taking out last week's lows. This has looked horrendous for a while. This was one of the first to kind of break structure here and break down from this pattern that it was in for 6 or 7 months, and it just continues to look really weak here. It is oversold on virtually every metric, but for now, oversold's just getting more oversold, and it is tough to be a dip buyer here. If you're really tactical, look for a reclaim of last week's lows around 53.50 or so. If this can trade up, or if it starts up with some gap up next week, maybe you have a nice kind of low risk entry point as this failed to break and continue lower below last week's lows. So that is what I have for this week. A little bit quicker, but hopefully you guys made it through some of this volatility. After all was said and done, again, nothing really happened this week. So try not to get chopped up with the VIX still trading around 20. I would expect those ranges to be a little bit wider. And again, check your earnings dates on any of your holdings as we start to get into the thick of earnings season. So that's it for me. Thanks so much as always for watching. You can subscribe to our YouTube channel, catch up with everything that we're publishing every Tuesday, Wednesday, and Friday. Thanks so much, and talk to you guys next week.